Well, hello and welcome to another video by Financial Learning. On today's video, I'm going to break down the 10Q earnings that came out not too long ago. I know it's been out for a couple days already. Some of you may have just read the press release, but I did open up the 10Q and I poured through it myself. I did highlight a couple items and I did do a gap analysis based off of my original earnings estimate. I do have a video out on that, but I'll go through that and I'll explain exactly where it is that I fell short or where it was that I nailed it when it comes to the estimated earnings. Also, I'll be talking about a couple of other really exciting things that CleanSpark did put in their 10Q that I haven't actually spoken on before. So make sure you stick around to hear about that. And with all that being said, let's get right into it. Moving through this 10Q, you're going to see the first thing on this first page that's definitely worth noting is going to be the overall share count. You can see that as of May 6, 2025, there was 280,943,856 shares. Again, this is registered shares for the common stock. So as CleanSpark did mention, they have not been hitting any form of an ATM or any other type of dilutive activities. There were some very minor amount of warrants and other options that were exercised, but it was very minimal, and I'll go through some of that as we continue on. So moving down this list, I'm going to be going through rather quickly because I want to make sure I have plenty of time to kind of go through the quarter over quarter breakdown for CleanSpark. But moving past some of these forward-looking statements, and again, if you're not familiar with those forward-looking statements, those are really some of the warning signs, or those are some of the statements that all publicly traded companies have to put out there. It just covers them legally in the event that if there was anything that was out of their control that would happen to the company itself, these specific statements do cover them or protect them from any form of litigation. So moving on a little bit further down, we'll get into some of the asset lines. So assets and liabilities, that's going to be the actual balance sheet portion of the earnings statement. And you're going to see, based on the assets minus liability, that's really going to give you that fair value of the company. And then when you take that number and divide it by the number of outstanding shares, that's how you're able to get that true book value in terms of the share price. So what is a fair share price? And you can see, as many people have stated, that CleanSpark is trading right around the book value price for the stock. But looking at this, overall assets is currently sitting at $2.6 billion, and it is a mixture of some cash, some of that Bitcoin treasury, and then of course, some of their items. They do have a nice 1.2 billion in terms of property and equipment. So those miners that they do have a pretty hefty price tag. And we will see some of that as we go through and see some of the either open or completed purchase activities. And that's going to be some of the information that I do cover on the spreadsheet. So moving along in terms of liabilities, they had a total of 766 million. So again, that's a pretty healthy ratio between assets and liabilities. You never want to see the debt to equity ratio be greater than 1. And in this case, it is nowhere near that. So again, if you're looking for fundamental stocks, that is one item that I personally do pay close attention to, because in the event that a company is underwater in terms of liabilities versus their assets, to me, that's a red flag in terms of potential dilution that may be coming up, because they do need to be able to pay those liabilities off. So moving down a little bit further, we'll get into the stockholder equity. So again, this is just reflective of the overall amount of assets. You can see that they do have the liabilities and equity coming in at that same $2.6 billion. So this just gives a quick breakdown of those items that work into that number. All right, and jumping down into the revenue line item, this is where they're going to be doing what you may consider balancing that checkbook. So income versus that outcome. So the income, of course, is going to be their Bitcoin mining revenue, and it was 181 million. And you can see some of their costs of operation, some of those costs of expenses. One of the major ticket items is going to be the energy expense, and it's around $85,424,000. And you can see here it does say that this is exclusive of that depreciation and amortization. And after that, you can see the professional fees coming in at $2,983,000 and payroll expenses at $15,255,000. But finally, The last of the administrative expenses is going to be that general and administrative expenses. People call that the SG&A. And that has a total cost at $11,736,000. So those are the numbers that we will be reviewing later on to kind of get a good idea about that quarter over quarter cost of operations versus the revenue numbers. So outside of that, we'll take a look at some of these other items. And one thing I think it's important to talk about is EBITDA. You may have heard of this. That is what I like to look at when I'm looking at a company in terms of their fundamentals. That's going to be their earnings before things like interest, taxes, depreciation, and amortization. And again, depreciation, amortization, those are items that the companies are able to use as an expense item to kind of write off some taxes. And as you know, Bitcoin is a very heavily taxed type of equity, if you want to call it that. There is a capital gains that's applied to all of the transactions anytime that the company is making any profit on that Bitcoin. So depreciation is definitely a great way the company can write off some of those gains. So moving down past that, you're going to see some of their other items. These are some of the smaller ticket items, such as gain on Bitcoin collateral. This is going to be some of the either gains or losses of any of the money that they may have tied up in their creditors. So if they have any money that's tied up in collateral, this is where that line item is going to be. They do separate that from their overall Bitcoin holdings as it is being held by someone else at that moment. So again, it's a great way to kind of look and see that specific item as well. Moving down, there's interest expenses as well as interest income. Again, these are some of those ticket items that you would not be looking at if you're looking at a company's EBITDA. So moving down below, you're going to see the overall expenses. And again, this is going to be the net loss in terms of income attributable to common shareholders. And this is going to be everything, coming in at negative $135,846,000. After that, you're going to see the EPS earnings per share, and it was at a negative 0.49. But just want to kind of point it out again and recall I am going to be going over that comparison, and you will see that I had a negative 35 cents earnings per share. And I'll talk about that gap of items either that I neglected to realize or just things that I was not privy to. But moving down, you can also see, and this is another great thing, is that weighted average of the common shares outstanding. And this number remained flat, and it came in at 280,853,882 shares. So again, as CleanSpark did state, they have not been doing any forms of equity raising using dilution. And here's another great example of just all various different shares that they do have. There's their preferred stock, their common stock. They also have some of their treasury stock and a few other items. So again, if you want to look at anything else outside of common stocks, this is a great table to take a look at. And this is going to be for the 3 months ending March 31st. But moving past that, you're going to get into the 6 months. We'll move past the 6 months, and now we're into the cash flow statements. And this is going to be a 6-month ending cash flow. I'm not going to go through all the line items, but one thing I do want to mention, when it comes to cash flow, you're going to see a lot of things getting pulled out because when you're talking cash, it's just the hard dollar. So anything that is not actually being transacted in terms of US dollars, you're going to take those out. So things like, for instance, the actual value of their Bitcoin treasury. That is not something that is physically a dollar right now. So you remove that from the cash flow statement. So you can see a lot of these items that come off of here. You can see the Bitcoin mining revenue. You can see their gain on fair value of Bitcoin. You can also see a few other items, anything that they did not spend a US dollar on or they didn't receive a US dollar for, it's going to come off of this cash flow statement. So overall, you can see that the net income came down to a negative $231,735,000. And that's going to be that cash used in operating activities. And as we do know, they still have over $90 million cash on hand. And they have that hefty Bitcoin treasury with the Coinbase line of credit that they can use some of that Bitcoin as a collateral and tap into for any additional liquidity that they may need. But moving on past that, again, here's some more cash flows. This is the financing activities side of the cash flow, but I will go past all of that. As I said, I do want to jump into the spreadsheet, but I did want to make sure that I at least did a quick briefing on this 10Q. I will put a link to the description of the 10Q. I did get this off of the sec.gov website. But moving along, it does talk a little bit about the company, explains the origin of the business, exactly what they do. It's a lot of information if you're not really familiar. maybe this is one of the institutional investors that maybe hasn't really paid too much attention to CleanSpark. Maybe they just got assigned CleanSpark to review. This is a great place for them to start. But moving down past that, they go through some of their financial requirements that they are now holding to. Outside of that, we'll get down a little bit further. They talk about Bitcoin, they talk about their stocks and warrants, and then they talk about that convertible debt. So we do know that they did raise some convertible debt back in, I believe it was in November, maybe it closed in December, and this debt has a maturity date into 2029, even 2030. So again, it is postponing any form of shareholder dilution. And instead, it is giving the company cash to be able to spend um, intelligently in order to be able to raise additional revenue in the form of capex items. So they can purchase additional miners now and start mining Bitcoin now before the price of Bitcoin increases rapidly. So if you think about that, it's a pretty smart move because yes, they're borrowing cash now with 0% interest. They're investing it back into their mining equipment, and the mining equipment has a return on investment of about a year and a half or so currently, based on the current price of Bitcoin and based off of some of their costs of goods. So moving on past that, you'll see some of their cap call transactions. All this information is things that was already in previous earnings statements, so I'm not going to go into them in any form of detail, but just so you know. Also, they talk about that earnings per share, and then it gets into a little bit more of just how they're calculating that earnings per share. So I will continue on past that, and they do show the overall number of potential shares that would be hitting the outstanding share count. And again, some of these are all the way out into 2030. So again, not too concerned with any short-term dilution. And again, the company has the opportunity, if they have made some significant capital in that zero interest investment, that they could potentially buy back the shares, or they could just pay this investor back. So again, a lot of options here for CleanSpark and a plenty of runway to figure it out. But moving on past that, they go into some of the different asset classes. Again, I'm not going to go through all of that, but if you are a finance person, that is one place you probably want to spend some time. Moving past that, talks a little bit about some of the acquisitions. We all know, if you've been following CleanSpark over the past couple of months, that they did acquire Grid Infrastructure, and we do have Harry Suddick now on the team from that company. He is now one of CleanSpark's SVPs, and I believe he is now even investor relations person. So again, looking forward to hopefully meeting him at the Bitcoin conference. Moving past that, you're going to see some of the other line items in terms of assets and restricted cash. It goes through quite a bit of this information. It talks about just how the grid acquisition was laid out from a pro forma standpoint. You do go into quite a bit of the details behind the inner workings of that specific acquisition. I'm not going to go through all that on this earnings review. Moving past all that. And again, there's that pro forma I was just talking about. Moving past that, you're going to get into some of the other allocations of those assets from the grid infrastructure acquisition. And then finally, outside of grid, there's been a couple other acquisitions that have went on. So for instance, September 10th, 2024, you can see that there was a Tennessee acquisition that was put in place. And again, a lot of the acquisitions from CleanSpark are private miners. However, they do also look at public mining acquisitions such as grid infrastructure. But moving on past that, you'll see another acquisition here. This is in Mississippi, Clinton, Mississippi, to be specific. Another one of the sites you've probably heard of Clinton, Mississippi on one of their press releases when they give their monthly mining updates. Moving past that, it goes into that Bitcoin and just how that Bitcoin price has shifted in terms of that fair valuation. So if you are wanting to know how they calculate that, you can definitely take a look into this section here on F18. Moving past that, you're going to see some of the other receivables they got from Grid as part of this transaction. And I believe they will eventually get down to some of these shares that are involved, some of the warrants that are involved with this acquisition as well. But moving past that, here is some more of that property and equipment, and then some of the intangible assets for the company. So again, I'm not going to go through the details on here, but this is the section 8, that would cover those intangible assets. Moving past here, you can see some of CleanSpark's current loans, and you can see the maturity date for these loans. Again, that convertible note, 0 interest, and it's not due until June of 2023. It does have a call option or does have an option to convert a little bit earlier, but the share price has to be at a specific amount in order for it to be exercised. So that's why I said between 2029 and 2030. Outside of that, they do have a small amount, and this was because this is as of March 31st. So the Coinbase line of credit was still sitting at 50 million, and you can see it has an 8.5% interest rate, but there was no balance as of March 31st. We did see a couple other items here for 7.3, 13.8, 10, and 13%. A few different loans that they have outstanding, all rather small in terms of principal. So highest one being this 6.4 million for this Western Alliance. And again, maturity dates all the way out into August of 2029 with only a 7% interest rate. So I want to kind of move on past that. Then you'll see another one of the longer term maturities. So you can see here the total principal amount fiscal year. Here is when these payouts would have to take place. So for 2025, the only one coming to a maturity has a $4.4 million total principal balance. So moving on past that, take a look at some of the more information in terms of cap calls. Again, not going to go through all that, but they do kind of lay it all out there so you can kind of read through and get a better understanding about some of these deals that they do have going on. And they do mention right here, and this is in April of 2025, so this will be after the earnings statement, says the company amended their 2024 master loan agreement and expanded their availability of borrowings up to $200 million. So that is that Coinbase line of credit getting extended to $200 million. Moving past that, here's that Western Alliance Bank credit agreement and a few other credit agreements. So we saw the table, and here is some of the details behind each of those different loans. Moving past that, here's their income taxes, and then it goes through the stockholder equity. Kind of breaks that down a little bit as well. So if you rather read through paragraphs instead of looking at tables, you can definitely find both of those here on this earnings statement. Going past that a little bit further, they do talk about the ATM that is already been completed, and they talk about some of the stock issuances. And you can see from a 6-month standpoint, looking back, there's a total number of shares that have been issued. And again, they do talk about that March 2024 ATM. And as you know, this ATM has been closed as of November of 2024. So just kind of want to point that out as well. If you do see some of these, just pay attention to the issuance during. It's a 6-month issuance, not a 3-month issuance. Moving down a little bit further, they go into some of the stock warrants, and they do have a table that kind of explains that a little bit. Now, this number did look pretty high when I first looked at it. I was a little bit concerned with 22 million additional warrants being exercised. But then when you look at how these warrants convert in terms of share count, you can see it converts to just 1.6 million shares. So this is just part of that grid acquisition. So just pay attention to that. I do think it's pretty interesting that they are holding those shares and they are not in any rush to start exercising those. So I want to point that out. And these are warrants that CleanSpark did acquire from the grid acquisition, not to pay to grid, but to pay to one of grid's debt holders. So GEM had outstanding warrants with grid that CleanSpark did take over as part of this acquisition. But moving down a little bit further, you can see some of this stock-based compensation. And again, you can see they do have options granted, but then they also have options expired and options forfeited. So you can see the company, some of the executives or some of the other team members have decided to even forfeit or let some of these options expire. Just going to point that out a little bit as well as we continue on. Moving down a little bit further, you're going to get into some of what they call RSUs or restricted stock units. These are going to be some of the things that the executives do get as part of their vesting program. But again, a lot of these are being rolled up, and I haven't seen any buys or sells recently for any of the executives, any of the executive team members. It's been, a month or two since I've seen any of these coming through. So if you happen to see some of these and it slips past me, make sure you shout that out in the comments. Moving down a little bit further, here's a PSU, performance stock unit. So again, these are going to be performance-based awards. So there's various milestones that various executives would need to hit in order to be able to be eligible for these PSUs. Moving past that, they talk a little bit about that 2025 Long-Term Incentive Plan, or LTIP. Again, that's another form of payment for these different executives and different leaders among CleanSpark. So again, if you think about it, they're either going to be paying out in cash, which will be costing the company a pretty good amount of money in terms of their income statement, or they can look at doing things like executive stock compensation. So, yes, these stocks would go into a restricted fund, and then the executives would have the option to either hold or sell at that point. But again, I think the company did a great job over this past quarter of not exercising very many of these options. And you can see that again on that payroll line item, which we'll take a look at in more detail in just a little bit. But moving down, we're a little over halfway through, so thanks for bearing with me. We're going to talk a little bit more about some of the commitments and contingencies. So this is some of the items that I really enjoy looking at. These are still open line items. So if you're looking for some future guidance, or if you want to see potentially where the company is heading towards, I like to look over the commitments and contingencies. So first thing to do is look at these contractual future payments. So still owe these specific companies, and that is because they have not received some of this. So you're going to see there's a total open purchase for Bitcoin miners at $74,496,000. And we'll talk about that in just a minute, as we do have another line item that we will mention as something that is happening in this current quarter. And Gary did lead to that on that earnings call. And I have highlighted that in a different video, but we'll quickly touch on that as well here. Outside of the Bitcoin miners, they do have some additional modular immersion data centers, about $49 million. I'm actually excited. Even though they have to pay out this money, this is the future of Bitcoin mining. These are the most efficient at 13.5 joules per terahash. These are the pieces of mining equipment that you want in your facility. Not only do they reduce that noise burden that some of the, or noise pollution, as some people do call that, for the residents around the area, but they also perform at some of the highest efficiencies in the industry, and they do produce rather hefty hash rates. So again, these are exciting in my opinion when I see that they are planning on about $50 million worth of additional immersion mining infrastructure. And then some of the construction in progress. We do know that they are expanding on some of their sites, and this is that line item here. So again, we do get a little bit of a forward look in terms of some of the activities that CleanSpark has ahead of them. Moving past that, you can see some of the purchase of Bitcoin miners. Company had a total of 74,496,000. So if you want a little bit more detail besides just the table here, there are a couple paragraphs that go into a little bit more detail in terms of the different miners. So again, take a look at that and let me know your thoughts. But continuing on, there's some state tax incentives. I won't go into that. And then here is some of the legal contingencies. All right, so after that first one, there is one here where there is just a little bit of an update. So we'll quickly read this. This is a consolidated Smith derivative options. And you can see this is really lodged against the company. Some of the company's board of directors, they formed a special litigation committee to investigate and evaluate some of these claims. And the court did grant this specific committee's motion to intervene and stay the case. So they put a pause on the case through November of 2024. So as we are in 2025, there has been some activities. This is just a small update with not a whole lot of additional context here. It does say that the plaintiffs filed their opposition, and on March 10th, 2025, the SLC, again, that is this special litigation committee, they did reply in support of their motion. So again, the plaintiffs filed their opposition. So we're waiting to hear back from the attorneys there. And again, this is the statement from CleanSpark. The company believes that the claims raised in the consolidated Smith action are without merit and intends to defend itself vigorously against them. By this time, company is unable to estimate potential losses, if any, related to the consolidated Smith action. So again, no real updates besides the fact that there has been some back and forth. But other than that, we'll continue. And that's it in terms of litigation. So not too much open for CleanSpark. Moving on a little bit further, again, they talk about their vendors on a 6-month period. You can see Bitmain is by far their largest vendor at 94% of their overall mining fleet compared to Canaan at just 6%. So still good though, in my opinion, but they do have a second source in the event that there's anything wrong or if there's any concerns with some of the Bitmain hardware kind of making it over to the States for a short period of time. CleanSpark can lean on this other company, Canaan, to come in and kind of bridge that gap if need be. Moving down. Again, this is actually one of the exciting areas that I like to talk about as well. And this is the subsequent events section. So the first thing is going to be that 2025 line of credit increase with Coinbase up to 200 million. Don't have to go into too many details there. But again, I think this is an excellent tool that the company can now leverage when they are looking to sell some of their Bitcoin mined each month. In the event that maybe they just feel like holding it a little bit longer, or maybe there's a larger purchase that they want to be able to get ahead of time and then maybe use a little bit of additional Bitcoin monthly mining sales in future months to kind of pay it back. They have that option now, a pretty good amount at 200 million. But the other thing is this miner option exercise. I do have a full video about this, as well as you can hear some audio from Gary Vecchiarelli, the CFO for CleanSpark. But just to summarize, there's 13,200 of the latest gen miners, and I do believe when I heard on the call that these are the immersion style miners, they were able to take an open PO for about $76.6 million, and they negotiated it with a 15% discount. So the amount of Bitcoin that they used in this transaction, because they did not pay US dollars for, had a spot price of just $66,751,000. So again, 15% discount on the initial Bitcoin spot purchase. And then they do have the call option at a later date, later this year, that they can purchase that Bitcoin back at a purchase of 110,000 per Bitcoin. So again, in the event that Bitcoin hits 120, $130,000 per coin, the company does have that call option where they can gather those Bitcoin right back from Bitmain and pay Bitmain that $110,000 per Bitcoin price. So this next section, I actually really enjoy reviewing, and this is that Bitcoin mining operations. And we're going to compare CleanSpark with the overall Bitcoin mining sector. You can see the global hash rate as of March 31st, 2025 was 835 exahash. And when I did my calculation, I actually took the average for the quarter instead of taking quarter end when I did some of my cost of energy and some of the other calculations. So again, sneak peek onto one of the gap issues that I ended up running into. But you can see the company's efficiency sitting at 17. They say watts per terahash. Another form is joules per terahash. They're both energy units. So looking down past that, you can see the company's hash rate at the end of the quarter sitting at 42.4 exahash per second. And that is actually a 5.08% overall market share for hash rate for CleanSpark. And with that, you can actually get an idea that they were able to mine about 22 to 23 Bitcoin each day based on that 5% hash rate market share. And moving down here, here's the breakdown for the cost to mine each Bitcoin. And this is for their own facilities. This is the table that I love to review because it helps me when I'm comparing those monthly mining numbers from their publicly traded Bitcoin wallet. I get a pretty good idea about what some of the income statement's going to look like, at least in terms of the revenue and the cost of revenue. Still don't know exactly what they have in terms of the payroll, SG&A, professional fees, and other items such as that. But overall, get a pretty good idea about how they're doing. So take a look here. You can see that the energy to mine single Bitcoin came in on $42,664 per coin and a $3 for overall non-energy units per Bitcoin mine. So pretty small number there. Moving down past that, you're going to see all-in cost for energy was at 42,667, and the depreciation per Bitcoin came in at $35,056 with some financing as well on these miners at $60 per coin. So all in, and this is without SG&A and professional fees, it was $77,783 per Bitcoin. I do have on my spreadsheet where I've added in the SG&A and I've looked at it with and without depreciation, just so that I understand how much do they really need to pay out on a monthly basis to be able to sustain that cash flow. So outside of that, you'll see the average revenue for each Bitcoin mine as well. And with that, you can get an idea about what the profit margins were like in this last quarter. And when you're looking at it just from an energy cost standpoint, the energy cost was 46. That leaves CleanSpark with a nice margin of 54%. But when you look at it, when you include depreciation, the overall margin shrinks pretty significantly down to just 16.2% profit margin. But again, Depreciation is again just a write-off number. It's not actually cash going out for the company. Although they do need to make sure that they do have money earmarked for those miners as they are on a 3-year aging cycle. But as I've stated, they do have a return on investment of about a year and a half to 2 years, depending on the price of Bitcoin and, of course, the overall global hash rate. But from a lot of the calculations I've been doing, still sitting right around that exempt ROI. Moving down past there, you're going to get a little bit more information in terms of some stats. You can see that they do have that cost per kilowatt hour down here at 6 cents. Zach did touch on this during the earnings call, and this was mostly to do with higher energy rates in January and February with a pretty significant winter storm that they had there in the southeastern states, specifically in Georgia. So they did decide to continue mining because the margins were still there. So they went ahead and incurred a little bit higher energy rate costs. And again, this is one of the items that I did not account for when I looked at that cost of revenue, specifically the cost of energy. So again, my mistake there, and I will show that on the spreadsheet in just a minute. Moving down past that, you're going to also see some of the depreciation for the miners only. So again, this is the overall, this is the summation for the entire quarter. How much did the depreciation attribute? And that was $67,925,000. And the energy expense, again, this is for the quarter, came in at $82,668,000. But moving past the cost to mine the Bitcoin and the revenue per Bitcoin, they do go through quite a bit of this in paragraph format. So if you prefer paragraphs over tables, take a look at those sections and read along. Moving past there, they do talk a little bit about their hosted facilities. Now, I scratched my head a little bit because I thought at the end of December they had closed up shop and discarded the last of their hosting agreements. But according to their earnings statement, they did have a whopping 19 Bitcoin being mined in a hosted facility, at least in the beginning of the quarter in January. So again, hopefully this is the last quarter that we have showing these because as you can see, these host facilities had an atrocious cost to mine the Bitcoin compared to CleanSpark. Definitely not in the profit. So again, glad they have really chosen their own destiny and decided to go all in on self operations. So moving down past there, you're going to get a little bit more in terms of the 3 months of Bitcoin mining revenue. So again, this is going to be a little bit more of the income statement in paragraph form. So if you want to take a look at that, you can glean a little bit more information out of those stats. Past that, I will continue on. So if you do want to get a little bit more information, specifically, I mentioned payroll a couple times. If you want to see how they did there, and I did mention they talked a little bit about some of the stock-based compensations, how they did kind of postpone that. This is a great section to read through here. Let me just highlight a couple of the quick points. And again, we're comparing March quarter ending 25 with March quarter ending 24 here. So you can see that the payroll expenses did decrease by about 9% when comparing year over year. And then looking down a little bit further, they do look at the payroll expenses that excludes some of the non-cash stock compensation. And you can see there's an increase. So the actual cash going out in terms of payroll, there was an increase from 7 million up to 12 million, about a 73% increase. And this is just the actual US dollars going out. But again, overall, when you're looking at an income statement, they were able to mitigate some of that by postponing some of those stock-based compensation items. And they do talk about that down here on the second paragraph in payroll. They do say that they grant a stock-based award to certain employees as a significant portion of their payroll-related costs. And they talk a lot about the various amounts between 2025 and 2024. And then they say that the decrease in stock compensation was mainly attributed to the vesting of a certain market-based restriction stock awards in February 24. So again, they did vest it and they do not have it currently being exercised. So that's how they're able to reduce some of those payroll expenses. So moving down a little bit further, this G&A section here, and then depreciation and amortization. So again, you want to read through some of the details, they're right here for you. Moving down a little bit further, they do go over the 6 months end. I'm going to breeze through this. I think it's more important to look quarter over quarter than, really 6 month over 6 month. But past that, they talk about their non-GAAP measurements and the adjusted EBITDA. Now, there is one table, and we're almost to it. I think it's a really good table to show as well. and it is the non-GAAP adjusted EBITDA. And then I like to take that amount and then remove the fair value of the change in price of Bitcoin. And that, in my opinion, really gives a good understanding of the cash flows for the company, or the overall profitability of the company on items that they can control, meaning the operational side. So looking down a little bit further, we'll get through some of the non-GAAP EBITDA here, and this is actually the section that I wanted to quickly just spend a minute on. So if you look over the net loss income, again, this is from that income statement, they do start to subtract some of the earnings that are related to, again, interest, taxes, depreciation, and amortization. So when you remove all those items, you're going to see that the non-GAAP adjusted EBITDA has went down to just a loss of 57,789,000. But pay attention to that asterisk there at the end of EBITDA. It does say that the company, we have not excluded our net gain on fair value of Bitcoin. That's this $127,667,000. So if you were to, again, remove that as an expense on this non-GAAP EBITDA statement, it would actually put the company in a positive $70 million in terms of net gain for their quarterly operations. So again, I think that is a rather good look from an operations standpoint. That does give them a $280 million profit run rate when you're looking at the non-GAAP EBITDA with the adjustment of the fair value of Bitcoin getting taken out. Moving down past there, go through some of the liquidity and capital requirements, and then some of the operating activities. So there is a section in here that covers the overall number of miners for the company. And if I did pass that, I'm going to stop for a second, find it, and I'll jump back to that page because I think it's an important page to show. All right, and under the company overview, I did mention how I was breezing through this, but there was a really good Easter egg I think it's worth showing. If you've been paying attention to CleanSpark's monthly updates, you would have seen that they had over 200,000 rigs currently in operation. But here's an item that I think is very interesting. When you go down to the second page under their operations, you're going to see it says that they own approximately 313,000 miners as of March 31st, 2025. And they talk about that only 205,000 of those miners were actually in service during the quarter, or during the end of the quarter, I should say. So about a third of their overall miners is not being utilized. Some of them are brand new machines getting ready for the Wyoming and also the Jackson, Tennessee expansions. And I'm going to go through some of those expansion items as well. I'll probably put it in a separate video, but I will be putting it out very soon. So look for that in the end screen. But just to show you, outside of new equipment, there is a caveat you definitely need to pay attention to. And it also says that they're being evaluated for relocation or pending repairs. And again, our miners range in age from 2 to 51 months and have an average age of approximately 13 months. So again, looking at it from an ROI standpoint and from a depreciation standpoint, the majority of their miners still have about 2 years to go on their life cycle. And in about another half a year, a lot of these miners are going to already have paid for that initial capital. So again, the second half, the back half, pretty much would pay for the depreciation side of things. So really by the end of these miners' lives, they would have completely paid themselves off and the company would be pocketing a significant amount of Bitcoin revenue. So just kind of want to point that out as well. And with that, let's jump into the actual spreadsheet. All right, and jumping into the spreadsheet, I want to go through a couple of these different items. I've highlighted the ones that I think are very important to talk about. I will quickly touch on some of the items where I think I nailed in terms of earnings, but let's just jump straight into some of these columns. So you can see here I do have fiscal year 24 Q1 all the way through fiscal year 25 Q2 listed here, so you can take a look quarter over quarter to see how the company performed. And just so you're aware, the Q4 item, I did have to estimate based off of the annual statement and then subtracting or taking out some of these averages of Q1 through 3 in order to get a Q4 number. So that's what I did there. And then you can see after the fiscal year 25 Q2, I do have my Q2 earnings estimate. And then after that, it's going to be the gap. So the gap is going to be where we're spending a lot of time in review. But the first item is, of course, the revenue. I did a pretty good job estimating this. I came about $400,000 off in terms of revenue. And I was actually a little bit under in terms of revenue. And again, I didn't have that hosted facility if that was part of it. And then I've had just a small change in what I'm seeing on the publicly traded wallet versus what the company's been putting out in terms of some fractional on the Bitcoin mined and also some of the revenue numbers. So you will find on the publicly traded wallet the exact timestamp and the price of Bitcoin when it is transacted. And the company actually takes the price of Bitcoin at the beginning of the day, and I believe it's the UTC time standard that they're using. So it's that price of Bitcoin each day that they're using when they're calculating their revenue number. So if you are trying to take a look at the earnings yourself, make sure that you're looking into that. Um, Past that's going to be the cost of revenue. I did touch on this already, and this is one that I fell short on. And the main reason why I fell short is actually going to be on that energy cost. I had CleanSpark at a 5 cents per kilowatt hour cost of revenue, and they actually had a 6 cents average for their kilowatt hour cost of revenue. So with that big ticket difference, and we'll actually jump down at the end of the sheet and look into detail on the cost to mine each Bitcoin and some of the other all-in costs. But that was a rather large miss on my part. But again, not something I necessarily have control over. I cannot know what the energy expenses were for the company. My best estimate is going to be what we see from previous quarters. The only thing else that we have now, I'm actually going to start using it when I review the mining numbers and the wallet transaction history and activities, is going to be the fact they will be planning on selling the monthly mined amount in order to cover the cost of operations. And I'm going to assume that that cost of operations includes some of the indirect administrative costs. So anywhere where they're actually having to pay out the employees, that is going to be some of the items. And again, professional fees and the other general expenses. All of those I do have coming off as well. And I'm going to be using this last quarter SG&A items in order to calculate that. But using that and using their Bitcoin margin sold, I can kind of figure out an idea of what that energy cost was for the company. So I will be showing that calculation in a future video. Moving past that, one of the other larger items I've highlighted is going to be this $5,820,000 miss. And I actually overestimated in terms of payroll expenses. I put a small factor of increase just based off of cost of living, thinking it would continue to churn up. But as they did show, a large portion of that payroll was able to be reduced because they were able to vest some of their compensation in terms of shares in February. So outside of that, you'll see a $31 million miss. And this was an underestimate on my end. And that was on that gain of fair value of Bitcoin. Thought I did a great job figuring out that, looking at the starting cost of the Bitcoin on January 1st versus the ending on March 31st. But there were some other calculations that have to be taken into account, like the Bitcoin that they are selling in and out of their wallet. They were just selling some smaller, minor amounts of Bitcoin. So depending on, if you'll call it the tax lot, if you will, of that Bitcoin, it potentially is going to impact some of the fair value calculations. Outside of that, not quite sure how I missed the mark there, but I'll do my best on future earnings estimates to get as close as I can. I'll really study this specific amount that they put in this 10Q and see what I can do in terms of getting closer there. But moving down past that, you're going to see $11,520,000 miss. And again, I was under in terms of depreciation. However, when we look at the depreciation per Bitcoin mined, I was pretty spot on. So what I did not take into account is some of the additional equipment items and different infrastructure that is also depreciating on top of just the miners. So that was one of the another large miss on my end on the estimates. But again, not knowing how to really calculate depreciation on some of their buildings, had a hard time on that one. But moving down a little bit further, just overall total cost expense, you can see, even though some of these were in favor on the miss and some of them were not, you can see my overall gap, if you will, is at $54,490,000. So again, this is a large contributor to my EPS miss. Moving down a little bit further past that, you're going to just look at the income loss from operations. Um, Very close to what you see here on total costs and expenses in terms of the gap, I should say. So far sitting around a $54.5 million gap. And another change here, another large gap here is going to be the unrealized gain slash loss on derivative securities. I had them as a $3.6 million gain. It was actually $4.7 million loss. And I believe that this specific derivative had a lot to do with the call options that they currently have open. As you know, the price of CleanSpark was much higher when that specific call option was first engaged, close to the end of the previous quarter. So with a full quarter of recognition in terms of this derivative, I just missed the mark here by the tune of $8,360,000. Outside of that, summing up the total expenses, some of these were a little bit favorable on my end. I ended up in this category at a $7,350,000 miss. Overall, now just summing up, including income taxes, I ended up being at a $39,160,000 miss. So again, taxes were actually more in favor in terms of what I had as an expense versus what they had. So you can see I actually had them paying in 20 million in terms of income expenses. They actually had them reducing some of their cost of operations by 3 million for the income expense. So that was a pretty big swing actually in favor of reducing that gap. Past that, goes over some of the discontinued operations, nothing to talk about here. So that number remains flat. And again, preferred stock dividends. I had nothing and it was nothing. So got that one right there. And moving down into the EPS section, here's another thing that I ended up calculating a little bit wrong on my end, and that is the outstanding shares. I ended up using the previous quarter shares on this specific line item on the 10Q, on the previous 10Q, not realizing that is the average. And because there was a share buyback, that average amount of shares for the previous quarter was actually a little bit higher than the current quarter. So you can see it at 284 versus the full quarter at just 280. So again, that almost 4 million share difference would be getting divided by the overall costs. And that would also impact a little bit on this EPS item. So again, some of the largest items to just quickly summarize, it's going to be that cost of energy, a little bit on the depreciation end outside of the mining equipment, and then some of the even the income tax. That was about a $23 million difference between what I thought they would owe and then what they were actually able to reduce the cost for. Um, and then the share count. So with those couple of large ticket items, I believe that was where I fell short of as most. And then one other forgot to mention, it's going to be that gain and loss on the fair value of the Bitcoin. Again, I've had that off by a pretty significant amount, and I'm going to do my best on the next earnings to be much closer. So moving down into this other section, I did talk about the cost to mine the Bitcoin, and I do have a lot of that broken out. So we will look at that in just a moment. All right, and moving down into some of the cost to mine Bitcoin, this is really the great breakdown on the energy cost, the depreciation cost, and I even added in some of the SG&A costs to mine that Bitcoin. So you can see quarter over quarter, I do have all of them listed here. You can see the global hash rate. Now, I actually missed this on my calculation. That's because I took the average for the quarter in terms of global hash rate, whereas the company used the ending hash rate as of March 31st when they calculated their global hash rate number. So in terms of the global percent hash rate increase, you can see it did remain rather flat and then it did start to spike. A lot of that had to do with the price of Bitcoin starting to shoot up there in the month of November. So in order for some of these mining companies to be able to stay competitive, they did need to scale operations significantly after that halving event. And you did see quite a few companies doing that. So between that expansion in hash rate by a lot of these companies and the price of Bitcoin, which just again really push companies to continue to expand. Those are the two items that I believe the halving and the price of Bitcoin that really kind of pushed up that network hash rate. But you can see that in Q4 of 2024, there was about an 11% quarter over quarter hash rate increase, and then another 11% for Q1 of 25, and then actually a 15.6, almost 15.7% hash rate increase comparing Q2 to Q1. So again, that means that it's going to take a significant amount of additional energy just to be able to mine the same amount of Bitcoin. So energy prices across the board did end up increasing in terms of that energy cost to mine the Bitcoin for most of these mining companies. Outside of that, you can see the hash rate each quarter for CleanSpark, and then the efficiency numbers each quarter for CleanSpark, and the global hash rate market share amount. You can see that CleanSpark is sitting at about 5.08% as of this last quarter. And then the last item in terms of just overall operational attributes, it's going to be the number of miners in their fleet. And it's currently sitting at 205,412. And as I did share already earlier, they have over 300,000 miners currently at their disposal. So I find that very interesting that they have a significant opportunity to scale up if the timing is right, if the margins look good. So I am very excited as they continue to trudge on and get closer to that 50 exahash. But moving down, let's take a look at their own facilities. First thing is going to be that cost of mine. We said it was already 42,066.7 per Bitcoin. And comparing that quarter over quarter, you can see that is a significant increase. And a lot of that had to do with that cost per kilowatt hour here. You're going to see that we went from about 4 cents through most of fiscal year 24. We bumped up to about 5 cents to end Q4 of 24, and then remained there for the first quarter in fiscal year 25. But again, in January and February, with that Arctic storm that took place here in the Southeast, there was an increase on energy costs, but margins were still healthy. So CleanSpark did continue on through that. So just kind of want to point that out. I do believe we will see a reduction in that energy cost to mine for this next quarter. So keep an eye out for that. But outside of that, I'm not going to go through the overall depreciation costs and energy costs as an overall total because that was actually on the earnings statement portion. But continuing down a little bit further, you see their total amount of Bitcoin mined in their own facilities. They have them at 1938. I had 1956. So I was actually off in terms of the Bitcoin mine, and it was actually that 18 Bitcoin from the hosted facility. So again, that doesn't include the host facility amount. So it was still 1,956. But when you're trying to calculate from a hosting standpoint versus an owned standpoint, you do get different numbers. So again, we need to make sure we're using apples to apples and calculating the proper energy cost to mine the Bitcoin of their own facilities only. So with that being said, jumping down a little bit further, you can see depreciation. I had depreciation coming in at $33,808 per Bitcoin, and it was actually $35,056 per Bitcoin. So I was only off by about $1,200 per Bitcoin in terms of depreciation of the miners. I don't actually think that's too bad, in my opinion. I was pretty close. And even if you look at the overall expenses, when you multiply across all of the Bitcoin mined for the specific quarter, you're going to see I was within just $1,800,000. So not too far off in terms of depreciation. Now, of course, it did help that I had a little bit more of the Bitcoin mined on my number, but regardless, still only $1.8 million off on depreciation. Not too bad. But looking at this all-in cost, and when they say all-in cost, they're talking about the energy and the depreciation amount, not including the SG&A items. You can see it was at $77,783. I had it at $67,594, so about $10,000 per coin off. And a significant amount of that came from the energy costs at $8,800 difference in terms of the energy cost to mine the Bitcoin. So again, if I had that right, I would have been pretty close on the cost to mine each Bitcoin for CleanSpark. But one other item I think is important to look at is this SG&A getting added in. Again, if you look at energy, depreciation, and all of the administrative types of costs for the company, they actually came in at $93,250 per Bitcoin. So that's why CleanSpark is now stating with Bitcoin over $100,000, they have hit that escape velocity and they're able to mine at healthy margins. And the margins are even better because you can take off that $35,000 per Bitcoin because they don't actually have to spend that in cash. It's just a depreciation item for tax write-off purposes. So again, I still think it's rather healthy. If you do that quick subtraction, you're still sitting under $60,000 to mine a single Bitcoin for CleanSpark in terms of actual cash out in operations. But moving down past that, a couple other items I did want to talk about, and I'm going to go into a significant amount of detail on another video where I talk about exactly where the different power pockets are in the different states and what that looks like in terms of air cooled and immersion cooled, and just what that current path looks like to get closer to that 60 exahash per second goal. And again, CleanSpark's just trying to hit 50 by mid-year, and I do see them with about 54 to 57 exahash already coming down the pipeline just based off of some of the numbers that I've crunched. So I'll share that again on a separate video, but you can find that on the end screen of this one. But what I did want to highlight while we're here is just some of the costs for each of these miners and how I was able to get pretty close on the depreciation amount. So you can see here that the overall power contract for the S21 Pro fleet, if you look at the 182,000 miners that they had in purchase orders this past year, um, overall cost was about $626,544,000 for this significant portion of miners. And then the S21 immersion fleet, there is a purchase order agreement for 26,000 of those with a call option to purchase more. And I'll go over that call option again in the other video. But you can see that has a total valuation of $167 million in immersion miners. So when you take those and you have to get a good idea or try to figure out the blend of these. And again, I will admit that my blend wasn't exactly right because there were some other miners outside of these that were operating, which would have impacted depreciation differently. And for those I'm talking about, the grid acquisition, they wouldn't necessarily have the same exact miners currently in their infrastructure setup. Again, because CleanSpark didn't purchase those on any public purchase orders, I do not have that privy information. And as we did see, they have over 300,000 miners at their disposal, only using about 205,000 currently. So with all that being said, if you were to add up just these two items in terms of purchase order agreement, it is 208,000 Bitcoin miners. So they could literally remove all of the less efficient miners and fully integrate the S21 Pro fleet and the S21 immersion fleets. And if they were to do that, they would gain significant efficiency improvements. So the S21 Pro is about 17.5 joules per terahash, and the S21 immersion is sitting at 13.5 joules per terahash. So again, even with this blended of 87.5 and 12.5, I believe you will hit about 7 joules per terahash, which is about where they're at now. So I thought it was pretty close on the money with this blend. However, based on some of the open purchase orders still for these immersion miners, I think they must still be using some of the older Bitcoin miners in some of their locations. And as I did mention, I'll show you quickly just the cliff notes. You can see they do have a call option for another 50,000 immersion miners through Bitmain, and that is a total price tag of $322,500,000. And that would give them, again, that would be a total power draw of about 202 megawatts. So again, the reason why they're not going ham and just ordering all these immersion miners right now and putting them in their warehouse is because they need the infrastructure set up. They need the immersion mining structures all set up, constructed, and ready to go before they can drop in these immersion miners. So it doesn't really make sense for them to cash out on whether it be their Bitcoin or whether it be some of their cash or taking out various loans in order to get the Bitcoin mining fleets fully done in terms of their open orders. Again, they're just going to sit in a warehouse. They're not going to start generating return on investment. So I do think CleanSpark has it right. As they continue unlocking additional megawatts, they're then able to purchase these miners they do have call options for. All right, and thanks for sticking around to the end of this video. Some of those Easter eggs, of course, was the fact that there's over 300,000 miners at CleanSpark disposal, and they've only tapped into about 205,000 of those. There was also that really interesting transaction that took place where they got a 15% discount on the premium of some of those immersion miners. So again, as CleanSpark continues to do this, we're going to see some of those depreciation line items starting to drop down a little bit more because they're getting these miners at a little bit better value. And if you look through some of the other purchase agreements that they've done with Bitmain, Bitmain actually threw in a significant number of Bitcoin miners free as they purchase a specific volume of miners. So again, if you're a large industrial sized mining company such as CleanSpark, you're going to be able to take advantage of some of these wholesale rates, if you will. So if you did like this quick earnings review, please consider giving the video a like and drop me a comment. Let me know your thoughts about how I did on earnings. Again, I'm going to do my homework a little bit better by thoroughly reviewing some of these items that I came up short on. But if you did like it and you haven't subscribed yet, I'd appreciate that subscription. And again, I will have another video out going over the roadmap to 50 plus exahash in just a minute. Look for it on the end screen. And with all that being said, I hope you all have a great rest of the day. Keep calm, hash on, and I'll see you on the next one.